We're excited to start off the new year with this event. We've done this annually now. I think this is the 6th year. We started out as the 3 amigos, and now we actually have 4 amigos. So I'm going to turn it over to Marta, our VP Programs at the CCA, and she'll get us started here. So enjoy. Thank you.
Good morning, everyone, and thank you so much, Allison, and thank you to Faskins for hosting us this morning. We have a wonderful panel here, and as Allison said, it's a great way to start off the new year, understanding sort of what's happening in the region. I'm just going to briefly introduce our panelists this morning, and then I will be handing it over to Ken, who will be moderating it. Pablo Bréard, we've got from he's the Vice President and Head of International Economics, and also their Chief Latin American Economist for emerging markets. Jonathan Hausman on the end is from Ontario Teachers Pension Plan. He's their Vice President of Alternative Investments and Fixed Income Emerging Markets. John Price is the Managing Director at America's Market Intelligence and is in from Miami. And John Welch is the Executive Director and Macro Strategist of Growth Markets at CIBC World Markets. Just so you know, we do have a full slate of events coming up in the next few months, so please do look out for our emails. With that, I am going to hand it over to Kenneth Frankel, the President of the Canadian Council for the Americas. Thank you.
Thank you, Marta. Can people hear me? No. Great. I also would like to thank Faskins for hosting this event and accommodating all our last-minute changes to room configuration and the like. Thank you very much. I just want to say this is the first year I think we're trying the bar stool configuration, and the reason why is I've known these guys for a number of years, and my impression is this is most comfortable. They're most comfortable when they're sitting in a bar stool. So we'll see if that works for this early in the morning. There's a lot of political and economic information to cover this morning. We're going to try and stay away from too many statistics. Eyes glaze over when you keep repeating numbers and percentages, but they'll come in every now and again as to highlight some of the points we're trying to make. The lead comment that one could make about 2015, just looking back for a second, is what a year. And that's both a declaratory and an exclamatory sentence. There were a number of things that we thought might have happened, and there were a number of, in the economic and political realm, and there were a number of things we thought would never happen. And what we want to try and do is bring us up to date to where we are now and then look at the year ahead. A year ago, and I'm going back to the program we did a year ago, South America, the predictions that South America would grow at about 1.8%. Instead, it shrunk by 1.6%. And now the figures may be a bit misleading on the overall basis because Brazil, a big chunk of that was Brazil, which shrunk by at least 3.5%. The latest statistic I saw was 3.7%, and Venezuela shrunk by 7.1%. Central America plus Haiti and the Spanish-speaking Caribbean was predicted to grow at a rate of 4.1%, and it actually grew a little bit more by 4.4%, and that was led a lot by the growth in the Dominican Republic. And the English-speaking Caribbean was meant to grow by 2.2%, and instead it grew by only 1%. Now, there are a lot of explanations for why this happened. There are 3 main themes that we'll hear about during the course of the morning, but they affect each country differently, and obviously the political situation and the economic structure of each country is going to affect how they deal with these 3 phenomena. But one, of course, first one is China, which for the first time since 1990 grew at less than 7%. Oil was down 70%. And the normalization of Fed rates in the United States has also had a big effect on what's going on in the hemisphere. So what we will try and do this morning is see if we can unpack these features and these characteristics and have a glimpse of what might be going forward in 2016. So to start off, I'd like to ask each of the panelists just to give the 2-minute, 3-minute synopsis of where they think 2016 might take us. Jonathan, do you want to start?
Okay. I'm not sure my mic is on, but I have a loud voice. When you speak to analysts about Latin America, there's a immediate tendency to try to provide some sort of laundry list of things to watch and things that are important. The problem is that often things that or factors that are mentioned are often put in equal weight. And the truth is that there's a great amount of disagreement as to what really has driven Latin American economic performance in 2015, and what it indeed will drive it in 2016. I can be compelled by a number of different arguments. There's China, there's the global demand, which has weakened substantially, and there's the question, of course, of the Fed. And I'd like to put up my hand and say that I think that there's too little focus on the big change in global liquidity that has essentially begun in December of last year. When you take a big step back and wonder why countries get into trouble, it's usually because things are too easy for too long, and then they get really, really difficult when they're no longer easy. And that's exactly what's happening with global liquidity today, and the Fed is at the very center point of that, although not the only driver. So I think the thing to watch is the pace of the interest rate trajectory at the Fed, and some other factors that are leading to a retrenchment, essentially, of global liquidity, which I think will set the backdrop for all of the challenges that Latin America, be they as a result of lower commodity prices, lower demand globally, all of those will be predicated, in my opinion, for investors by exactly how much the global liquidity allows opportunity sets in Brazil and Mexico and other places to attract us. That, to me, is the most important factor.
Well, I will just probably regurgitate everything what Jonathan said and just skip to John. Just kidding. I would like just to read a headline of the FT today, which reads, China steps up capital controls to stem outflows. And again, China, world's largest economy, according to the IMF's purchasing power parity measure, putting capital controls. And it brings back to my hometown in Argentina. It's not Argentina, it's China, putting capital controls. Then you go step forward and they say, but what's that? They don't have any trouble. They have $3.4 trillion in reserves, so they can do whatever they want. Yeah, but they used to have $4 trillion in reserves not so long ago. So they have used over $600 billion in reserves, 600 billion, or thousands of millions. That's a lot of money, talking about the abundant liquidity aspect that Jonathan was mentioning. So clearly, there's a lot about China, as we start the new calendar year. In capital markets, there's no calendar year or no year. It's just the continuation of what's been seen. So I had a couple of comments, and most of them are probably global issues affecting the region, and then we're going to go country-specific, through. The first one is, we know about China and the market crash that we're experiencing. Perhaps it's a good news right now. Perhaps it's a good time for us to start getting a good grasp of what China is, and it's both a stabilization factor and destabilization factor at once. Jonathan was mentioning, Fed policy. Fed policy goes well beyond raising short-term rates. What's happening with the Federal Reserve's bond portfolio? They own U.S. Treasury bonds. This is like, I don't know, the Central Bank of Mexico owning a chunk of Mexican bonds, the M bonds. So something, to me, it's an anomaly. It's not necessarily normal in economics and finance 101. Will that change? That's a big uncertainty, I think, in the year ahead. And if that changes, we will feel the impact because the cost of finance, particularly the long-term side of the cost of finance, will go higher. Then we have events that are irrelevant, such as the tensions, have been revived between the Sunni and the Shia community in the Muslim world. It goes back to the 8th century, as you all know. the fact that Saudi Arabia is just having just a bit of a quarrel with Iran, it's a major issue affecting, of course, global energy markets. Maybe it's not affecting us a lot, but yes, it is the world. North Korea testing just like some explosives. If it is H or A bomb, who cares? The question is, what is China doing? So all of a sudden, global issues affecting us. The refugee crisis in Europe. So who would have thought that Greece, the country who was in distress like 5 years ago, 6, 7 years ago, now is the one who's receiving the bulk of all those survivors that are coming out of the North African Sea. So my question is, with all these world events, North Korea, China, needless to say, the Japanese-China tensions on the military front is really, Latin America a big problem on the political side. Maybe domestically it is, but in global terms, maybe not as much as we think. So then who do we blame it, all this volatility? We blame it on the Fed, we blame it on China, or we blame it, and I start to think on pure economics and finance terms in one, macroeconomic excesses at the country level, and two, at the global level, excess liquidity. And we have to blame it on Alan Greenspan, Ben Bernanke, and perhaps, Janet. Oh, Janet. Looks like, this musical. But really, a lot of liquidity, easy money, as I was saying. So the unwinding of that liquidity, the correction of those excesses require policy shifts and require market action. And we're going to see a lot of that this year, most likely in the front end of the year. And I think based on the pace of adjustments of the market, some of those market corrections will happen fast, some of the policy shifts will come along. So that's one element. So 3 major points are, finally, the market stress will continue over the next probably 3 months at least. The global economic recovery is uneven. The US cannot just have just the burden of being the only locomotive in the world. We need Europe to start just putting its effort as well. Japan as well. Don't count Japan out. If you don't believe me, just take a look at what's happening in financial markets over the last 2 weeks. Probably Japanese yen is the only one currency that has been in demand. So clearly, it's still seen as a safe haven asset. And again, we do have all these global economic trends affecting the world. And at home, closer at home, we need Brazil to come back. Brazil is the 7th largest economy and a major force in Latin America. I think Brazil coming back may inject a bit more positive mood in our region, in the next cycle. And then we're going to go to all domestic issues. But I would like to leave it there.
Good morning, and thank you, Ken, for inviting me to be on this panel. Also, thank you for first saying we're not going to get bogged down in numbers and then tell everybody exactly how wrong we were last year. Very good. It was pretty good. Only for comic relief. But we did expect, and I think that's what the panel we had last year was, higher interest rates worldwide. Not slower growth, but sort of this in-between growth, and uneven, as Pablo said. And the Fed tightening, right? And Jonathan's concerns are there. And probably not as strong commodity prices. So where we got a lot of things wrong was on the commodity price front. We did not expect oil to get where it is right now. And certainly the challenges for Latin America have not changed. That part we got right. Lower commodity prices, higher world interest rates, and perhaps not fantastic growth worldwide. And the adjustment is happening. So 2016 is just the 2nd year of adjustment. And we have a lot of adjustment going on. Certainly the private sectors in Latin America, in the better countries, are very well along in their adjustment. In Brazil, we saw about a 45% decline in the current account deficit. But this adjustment entails 2 problems. First, you have to deal with current account deficits, which expand at first and adjust. And the fiscal side is always hit. So especially in Latin America, where you have direct fiscal revenues from commodity price production or from taxes. And the other harder part is always the fiscal side. Governments don't tend to be quite as fast or flexible. So how these countries are performing is completely proportional to how much they did before, how they managed the abundance, and we've gone the other way. So Chile, although it's had its problems, is doing fine. Colombia has more problems and has a lot of adjustment to do. Brazil took a turn to the wrong about 7 years ago. that left us certainly a CIBC negative since I've been in for the last 4 years. But they're dealing with the adjustment not very well at this point, but it's pretty clear what they have to do. The prospects of better policy in Argentina are there. Certainly Argentina's economic performance has not been very good, but now we already have quite a better policy in place, and the prospects for even better policy. And Mexico has been really quite good along this, although they did have a primary deficit bigger than Brazil's last year, 1.5% of GDP, and they have to adjust directly, mostly on the fiscal side, and of course they are wedded to the United States. We also have Peru, which is still the sort of star of the region, or the bigger countries, let's say. They have to deal with an election next year, but economic policy is pretty much on autopilot there, with very strong fiscal accounts, slowing growth as they all have, and the prospects for recovery for Peru, Chile, Colombia are quite good, and Mexico also. Whereas the ones that have taken the policy experiments the wrong way, especially Venezuela, and then we bring Argentina and Brazil in there, but the prospects in the future are much better for a number of these countries. So we're in the second year of adjustment. We'll see how they deal with it. Politically, these are always very difficult things to do, especially after so many years of abundance. And the countries that manage that abundance better, as I said, most of the Andean three, and Mexico will come out of this much better, whereas others are going to struggle a little bit. But of those countries, we still have a tendency, despite all the problems in Brazil, there was a center forming before the end of the year for better policy, and that center is still there, despite some of the things over the last couple of weeks. So I'm not so negative. Maybe we're off on the numbers a little bit, but we are seeing adjustments. Certainly, seeing industry come back in Colombia is something that we expected, and it came back sort of on cue in 18 months, and it's hidden by a lot of aggregate numbers that people throw around. Industry is growing again in Colombia. Why? Because refining is growing. Refining is just booming right now. Why? Because oil prices are low. So despite the fact you look at exports on Colombia, it says, 50, or it was 50, now it's 41% of exports were petroleum-based. Mainly the decline is on price and not on volume. And if you have any vertical integration at all, you get a big benefit from lower prices, certainly in refining and upstream activities. And we're seeing that in everywhere, including Brazil. So I'm not so negative. The Fed increased 25 basis points. I almost had a heart attack. I really did. I thought the world was going to come to an end when they increased 25 basis points. I'm sorry, but there is so much excess monetary base, not liquidity, as opposed to liquidity, monetary base in the world right now. I don't really think this is that big a deal. We worry it's definitely going to be this sort of Chicken Little world for quite a bit longer as we had last year. The sky is falling. The sky is falling. It didn't fall. So, but then we'll think about the next time it's going to fall. So I'm not quite as worried about the Fed. In fact, other aspects of liquidity that I think the Fed really needs to address, and other central banks, but especially the Fed, because of the amount of assets they've taken out of the system, treasuries and MBS, in terms of the ability to short, the ability to hedge, are still very constraining, probably more than interest rates. And I think a remedy to that on the quantitative side, as opposed to just the interest rate side, is forthcoming. But I'm not so negative about the world. It's going to be another tough year, though, of adjustment.
So I'm the sole Main Street representative here on the panel, so let me give a less technical approach. Governments are like people. When times are good, they lack discipline and focus, and times have been really good for the last 10 years. They've had cheap capital in the form of low interest rates and Chinese loans, and strong currencies thanks to high commodity prices. Those days are over. They're going to be over for quite some time, particularly on the commodity side, and I think that the monetary policies will adjust more gradually, but will also be painful. However, the good news is, in tough times, we get more focus and discipline, and there's policy shifts to much more pragmatic in almost every jurisdiction in Latin America. Some are moving more quickly than others. Obviously, a fresh new government like that in Argentina has the ability to wipe the slate clean and start fresh, and they're able to accelerate that adjustment much faster than, say, a Colombia or a Mexico, which, it hurts when you have to cut your budget by 30% because oil is down 70%. So whoever adjusts more quickly will reap the benefits. We've seen money pouring into Argentina because it's such a thin capital market, and anybody who puts money in Argentina is going to make money. And so hopefully that will provide further incentive for faster movement on policy. But the fact is that the last 10 years, Latin America was a great place to export to and not such a great place to invest, except in natural resources. Why? Because assets were expensive and policy was not very friendly. Now it's the flip side. It's a terrible place to export to. Not many people can competitively penetrate the Brazilian market right now or the Colombian market right now, to markets that have still, even though they've been gutted, still have industrial bases and local competition. But it's a great place to invest. You have cheap assets and you have smarter policy making. So I think for strategic investors, people who invest in factories and offices, etc., this is a great time to invest. In the past, when we've seen down cycles, I work mostly with American clients, they were sort of hesitant because Latin America was not a big part of their global portfolio. The people representing Latin America did not have a big voice at the board level. That's changed over the last 10 years. Latin America has grown from sort of 2 or 3% of most global companies' revenue to 8 or 9 or 15%. And some very smart people now run the region for global companies, people with a lot of weight at head office. And so though that, coupled with the fact that global companies now rely on Latin America far more than they did in the past for their bottom line, means that they, and the U.S. is doing very well, thank you very much, and U.S. companies still have a lot of cash on their books, they are keen to go back in. I see a level of appetite by strategic investors in Latin America that I never saw before in down cycles. So to me, that's positive. And you're already seeing a lot of movement in Argentina just in the few weeks that things have opened up. You're seeing more and more movement in Mexico, and you're seeing movement in Colombia. So I see a lot of strategic investment in those markets. The reindustrialization of places like Brazil and Colombia, and to some degree Mexico, also represents opportunities for B2B suppliers who can send products into those Latin American factories. And the other positive news is Central America. Cheap oil is great for Central America. And even if you take away the Petrocaribe subsidies from Venezuela, the upside of cheap oil is about 2 to 3 times what they lose on the Petrocaribe subsidies. So that's why Central America outperformed forecasts last year and will probably do the same this year. And so that's a positive. And I think Mexico, I know we'll get into Mexico, but I think Mexico will, it'll be a divided market between its export market, which is about 35% of the GDP, will do very well, and the domestic market, which will continue to underperform.
Thank you. That's great. I think we should just go home now. I'm feeling really good now. I want to try and look at some of these countries a little bit more individually now. And one of the things that's changed over the course of last year is there's not a day that goes by that you can't pick up the Financial Times or some other well-read periodical, well-respected periodical, and see at least one story about Latin America. I mean, that's not something I remember over the last number of years. And sometimes it's very positive news, and sometimes it's less than positive news. And we will start to deal with those countries that are most in the headlines or have been in the headlines the past year, and then we'll move to the other countries in the hemisphere. Argentina. Argentina, in a result that few would have predicted only several months ago, Mauricio Macri won the election, the presidency of Argentina, on a slim margin of 51%, but a margin nonetheless that nobody would have predicted a year ago. Nobody would have predicted it 4 months ago, actually. Some may have, but it would have been a long shot in a lot of people's books. He does not control either of Congress, either of the houses in Congress, so he's got political work in front of him. Now, in a flurry of activity that is a bit reminiscent of when President Bachelet took over for her second term, President Macri has gone through instituted a number of changes immediately, including scrapping the currency controls. He devalued the peso, cut export taxes for agricultural products, et cetera, et cetera, et cetera. I think would be nice to know, interesting to know, where is Argentina headed? What can we look forward to in Argentina in the coming year, or maybe a horizon of 2 years? How do you think these challenges will be met that President Macri is confronting? Pablo, do you want to start?
Sure. I promise to be biased. because I was born in Argentina and civilized in Canada. So as a good Latin Canadian, I can be sometimes be Latin and loud and clear and just rebel, or be extremely polite and nice and stop for the the green light to cross the street, as Canadians do politely. I will just make some comments, and hopefully, again, as I said, I am biased, and so that's my main disclaimer. But I'm going to use the big word, perhaps, and I think I really like what the three J's. I'm the only one who does not have a J, has a P here in the name, but particularly. That's why I put you there. Yes, exactly. And it's a good starting point of how I want to highlight my comments on Argentina. And I made some notes here, if I might. And I call it the P regime, by the way, which is a good start. When analyzing sometimes the institutional framework of a country in which we operate, I always say that I'm not an economist, I'm a context analyst, right? So we talk about the political aspect. The credit departments talk about political risk, and the political scientists talk about all those policy shifts. But there are the three Ps, right? So and the three Ps are really politics, politicians, and policies, right? And the politics and the policy, the politicians are usually more connected with probably with issues are more clear, but policies are the ones that we focus as an economist, right? So, and as John mentioned, John at the very far end, it's all the policy things about Argentina really, in one way, are easy to do, right? Because we all know what it needs to be done. Just following somewhat the orthodox model, you will be right in Argentina. So the issue is what's happening on the politician side and on the politics side, and that's where this comes a bit more complex. And we have to be aware of the complexities of the Argentina that we're going to see over the next 10, 20 years. When we talk about the politics, it's not only about just the politicking, it's about the regime itself. And understanding what is the regime in Argentina, I think it's more important than understanding what the government of Argentina is about to do. Because the government of Argentina is more connected with the policies that need to be done. But understanding the political regime is this, and I use my first time the word perhaps, the great opportunity for a transition government to start changing the regime in Argentina. Because if it is that, is this the beginning of a structural shift in the political regime of Argentina that has been in place for the last good 60 years with an alternate combination of military and civilian elected governments, but more with the same type of really, I state what you have to do, and democracy stay aside. If this is the transition government for a new regime, Argentina will boom in the next 10, 20 years. No doubt, and I'm biased, as I said before. So the starting point on the change in the political structures is tough because we've seen that already in the news, and Kirchner's just going into already begin the first demonstration against the Macri government, whereas Macri is doing every day maybe 1, 2, 3 policy announcements that we need. Of course, unifying the exchange rate, it was a no-brainer. When people say the Argentine currency devalued 35%, or 30%, that's wrong. Because the market reference was already, the informal market. So the only thing they did is they formalized an existing situation. So again, that is my starting point. Understand the three Ps: political regime, politicians, which are the individuals. And I can tell you, and I'll probably strongly affirm here, the Macri government is not about the individual, okay? And then the policies. So Cristina Kirchner, Nestor Kirchner, even just former military officers were about the individuals. This is not longer about an individual. And that's probably a major step in the right direction. Second one, the new government will focus on, as I said, policy changes, and we're going to talk about quickly the policies. Society needs to adjust as well, because all our friends, and the ones that we interact with in Buenos Aires and the other beautiful cities, in the country, they will talk about our same language. But society got used to receive a lot of subsidies, just going in public transport probably for free, receiving education for free, paying electricity probably for free in real terms when you just by inflation. And that is going to go. And it's not going to be easy for many people, including my mother who lives in Buenos Aires, okay, who has been complaining, Pablo, they're just, adjusting the electricity and the transport fuels, of course. That's called Economics 101. And it's coming and fast and furious. Third point, the power of BA. Very important to highlight here, and I pause here. BA, Buenos Aires. And it's not about tango or football or Malbec or the best rugby in the Americas, the best polo, right? So no, it's about the power of Buenos Aires as an electoral district. This is the first time since 1940s in which the province of Buenos Aires, just in an aggregate way, 1/3 of what everything is in the country, is controlled by the opposition. The opposition to who? The Kirchners, Menem, Dualde, the Peronists, or this P regime. It's about that regime, and that's the opposition. It's not about a party. Actually, Macri does not have a party yet. It's a transition. So the power of BA, that is a major step, but we need to focus, and maybe Maria Eugenia Vidal is a name as the governor of province of Buenos Aires. If she does well, who knows? That's probably a great leader following the transition. I just wrote this quote and I just invented, but it said the favorite TV show or soap opera of the Macri administration will be to monitor what's going on, across the border in Brazil, because really it is what Brazil is going through is what Argentina has to do in many aspects on the policy side. So I'm not going to repeat that. So fiscal deficit inherit of 7% of GDP, who knows, or maybe higher, because nobody, 100% of nobody believes in the national accounts of Argentina. So just going to a 10% of people believing 30, 50, who knows, maybe eventually 80%, that would be a major step. I think the IMF will play a major role here. It's not about an IMF program yet, but Article 4 consultation, which all of you know, it's an annual review of the fund. I think it will come soon. I think we need to wait for that as a sign of endorsement of the new policy changes. And finally, the Canadian connection, and I think that's probably for the end. If I may, just plant the seeds towards, in asking the question, what are the trade and investment opportunities for Canada in Argentina or in Latin America? And I will leave you perhaps with this. Why don't we add another one? It's trade, investment, and also partnership. We in Canada need to learn that it's not only about trade. Our Foreign Affairs Department, the previous administration or the current one in Canada, this is not only to promote trade. It's about promoting integration, two-way business links. And sometimes it's about partnership. And Argentina, in the agribusiness sector, is a powerhouse. And the fact that Macri administration has eliminated, all those taxes, on major agricultural produce, with the exception, for now, of soybeans, it's a major step and may just impact world agricultural prices. Who knows, maybe a great opportunity for Canada to partner, not necessarily just to go and sell to Argentina. And I leave it there.
Thank you, Pablo. I just want to say that of all the wonderful things you said about Argentina, it's the first time I've heard an Argentine not brag about saying it has the best soccer team and the best meat in all of South America. And I guess maybe that's because our Brazilianist is sitting next to you, and there would be, yeah.
Okay, may I say that we do have the best rugby? We could have been just.
Yes, that's true. And there'll be no dispute on that. Thank you, John.
Sure. Looking at Miami, Miami is filled with professional class Latin Americans who left their country because of declining economic prospects or security issues. And I always find it interesting. They're a great body of people to survey, and because they're plugged in at the highest echelons. It's their personal wealth that they're betting on, and so their movement and their actions speak very loudly as to the affirmations or not of a government. And just as when Uribe stepped in and started making changes in Colombia, and long before multinationals started investing in Colombia, it was Colombian money that began to repatriate back to Colombia. buying land, buying small businesses, etc. All my Argentine friends are excited about Macri. Several of them, at least 3 of them, were invited to be a part of the government, and 2 of them chose not to for personal reasons. But many of them are moving back to Argentina. And to me, that speaks a lot as to their faith. So, you know, this community here in Toronto, and we won't name which banks in particular, lost a lot of money in Argentina. So there is a lot of institutionalized caution in Toronto, and I understand that. But I think to what Pablo was saying, this is a different regime. This is not the Menems. There is a lot of faith in Macri, and he's proven himself as mayor of Buenos Aires. He is an engineer. He's cool-headed. And the people that he has chosen for his cabinet are not the crooked bent. So now, there are challenges. And the biggest challenge is, can he replace a chronically fiscally broken system of Robin Hood economics and transfer that liability into foreign debt, which he started to do last week by rotating bonds and making them more liquid. And he needs to do a lot more of that. He needs to open himself up, and they are doing it, to international capital markets. Obviously, a big step will be the renegotiation with the holdout investors, with Elliott and the others. And that's an important hurdle to get over. And the sooner they can do that, the sooner they can begin to bring down the subsidies. You know, Argentines, to bring their electricity prices to parity with Uruguay, would have to raise them by 640%. For business, 350%. So that's a very costly subsidy. There's all kinds of subsidies out there. And if you want to bring inflation down from 30% last year to a target of 15 to 20% this year, and hopefully down to single digits next year, that's what their plan is. You need to keep the unions from over-demanding on their wages, and unions really, it's the one country in Latin America where they really still matter. And you need to get rid of those subsidies in a gradual fashion. And that is the greatest challenge, I think, is that he doesn't get bogged down in sort of manifestaciones with all the big gremios and unions. That's the biggest challenge for him. And to do that, he needs to inject liquidity into the marketplace by opening up Argentina to capital markets. In terms of strategic investors, there's already projects announced in things like commercial real estate, which is dirt cheap compared to places like Colombia and Brazil, even still. And I think that with the new Minister of Energy and Mines, who's an ex-CEO of Shell Argentina, he understands that Vaca Muerta is as great a field as it is, still has to compete with great fields all over the world. And that means they need to redo their royalty and tax schemes, and they're in the process of doing that. Now, of course, in Argentina, it's a much more of a federalist system, so the provinces themselves, particularly in mining, have a lot of say in how things are taxed. But the federal government now is on board with a pro-investment head in charge of mines and energy, and I think that will be one of the early and promising areas where you'll see investment flows into Argentina. They're calling for the need for $25 billion a year to develop the energy potential, both gas and oil, in Argentina. And numbers probably about half that in mining. And they have, from a geological standpoint, it's a very exciting place. They have more or less the infrastructure to bring it to market. What they lack is the policy framework. But I think that will change very quickly. So they're going to be on as much as he's announcing policy change, the next thing is to go out and sell it to the world. And so you're going to see Argentina on the world stage. He's going to Davos, and you're going to see a lot more of Argentine promotion of investment. And I think it's, as much as we learned to grow skeptical over the last 15 years, I do believe that smart money will bet early. You have such a thin capital market that you put money in there, it's going to go up. Even if it's not that intelligently invested. So there's, in a world of abundant liquidity, Argentina, I think, will do very well. And what's exciting about a success story this year in Argentina is what it does to move that, embolden that center policy-wise in Brazil, and perhaps in Chile, will be a lesson to the new government in Peru. So Argentina could be a very interesting case study for the rest of the region.
Thanks, John. I'm going to call on Jonathan in a second, but let me just a follow-up question. You mentioned Macri's appearance on the world stage. His first appearance was at the, if I'm not mistaken, was at the Mercosur Assembly in Paraguay soon after he was elected, and was very clear that Mercosur, in his mind, wasn't going to be as it has always been, either in how it dealt with the political issues, particularly Venezuela and democracy, and how it needed to modernize and rethink what its raison d'etre was. He's talked very favorably about Pacific Alliance. I think he may have mentioned TPP as well. Are these developments that you think he'll be able to push over the first year, or does he have too much on his plate at the moment to do much? Not with respect to the political thing, because it seems clearly he's going to stay engaged with that, particularly in the Venezuela file. But in terms of thinking about the whole trade structure of Mercosur. Pablo?
Just maybe 60 seconds. I'm sure we'll ask everyone to. I believe that that first move has multiple outputs, right? So the input was, I'm going to say this. I'm taking office and I'm bringing the wife of Lopez, from Venezuela, besides me, which I criticize that as a move, by the way, but then I understood why he was doing it. It's not about Mercosur in his first appearance. It's about restoring relationships with the United States. And they want to make sure that deliver a message not only to Obama, those who are going to replace Obama, and the establishment in the U.S., and the legal community, your friends, in the United States, which is, they have been blocked also, in one way, the ability to come up with a solution to the holdout creditors. So the message is, I want to integrate myself again into the world map, and I need to have, very professional, at the high level relationship with the United States. And I need to let them know the U.S. Obama administration has sanctions on Venezuela, that I'm not with Venezuela. And irrespective of what the Kirchner-dominated Congress may think. And the second one is also a message not to Dilma Rousseff, but also to the replacement of Dilma Rousseff, maybe this year. Did I say that? Yes. Or maybe next year, perhaps. Or because Dilma will be replaced. So the message to Brazil, establishment and leadership, that they will not accept another type of Chavista-ish regime during his tenure. So that's my view. It's not about Mercosur, reviving Mercosur. I think just scrap that message. It's about restoring relationships with the Brazil that counts, and clearly with the United States. It's a no-brainer.
Thank you. It is interesting to note that shortly after Macri came out so strongly on the Venezuela file, Brazil, probably for the first time publicly through Itamaraty and Dilma, were very clear about their feelings of Venezuela. So it's a little bit of Argentina maybe taking the lead on something that Brazil felt it might get in line with. But we can come back to that when we talk about Brazil. Jonathan, you wanted to talk a bit about Argentina?
Just a couple of points on Argentina, I think, pick up directly from John Price's comments. I totally can see John's perspective, and I remember distinctly in 2004, friends of mine from Colombia who were residing in New York just decamping all of a sudden to Bogota, and something's going on, clearly. So I think that there is absolutely a shift, and people do vote with their feet. I just really wanted to emphasize a dilemma, I think, that we face as investors in Argentina. The first is there's been a lot priced in very, very quickly. That's the first point. The second is picking up on the point of, ultimately, this is a transfer of liabilities from locals to foreigners, which Argentina, of course, has trafficked in many, many times in the past, usually ending in tears. So there is a reason why there has been 100 years of economic underperformance in Argentina. And the reason is that the political economy has been essentially marked by a veto by unions, by Peronistas, and by, frankly, elements of the business community, as we have seen over the decades. So the question, I think Pablo put on the table, is why is this different? And I would like to state that question in the terms of this dilemma. The dilemma is that the tools that Macri currently is using to move things to unwind all the artificialities, artificial inflation, artificial fiscal accounts, artificial insemination, I don't know, artificial something. But to de-escalate all those things, he uses the same decree powers that the Kirchners created, which is undemocratic, to your point, Pablo. At the same time, the long-term future of a supple and changed forever Argentina requires a much more subtle and robust political democracy. These are in conflict currently. The other side of the dilemma is to satisfy people like me and my friend Eli here and others, there has to be substantive, sustainable change to policy. But that really isn't still a question mark, in my opinion. And in Argentina, the problem is that when things don't go okay, they veer hugely. Caballo, for example. Dollarization, pegs, Chicago's school solutions of various kinds that come down from the heavens like manna and then essentially expire. So I'm very encouraged by what we see in Argentina, but I think we have to be cognizant that we are against the odds here, against the odds.
Sure, please.
That's exactly one of the points I was going to make, but I think it's even longer. It's these very extreme swings between heterodoxy and orthodoxy in Argentina that have marked, and certainly since Juan Perón had his first tenure. And it really don't have the military there anymore to be a moderating source. So swinging between civilian and military isn't right there, but it usually corresponds to some crisis, either on the heterodox side or some lack of patience or disgruntledness with the more orthodox side. But I'm not quite so negative about that. I mean, that's the big structural change we need to see, is a more sort of normal type of government where the state is there as a state, and you don't get these huge swings anymore. But it's not, they are using decrees, but to keep that decree, and you're right, exactly right, Kirchner put these into place, the Kirchners put them into place, he has to deal with moderate paranoia, especially under Sergio Massa's group in the lower house. The way the decrees work in Argentina, you can rule by decree as long as both houses don't veto it. So if you have a majority in one of the houses somehow, then you can rule by decree. That's unlike Brazil, where you have to vote any decree in 90 days, and then if it doesn't pass, then it's gone. But with Sergio Massa, there is a coalition that controls the lower house. So it's not quite as, the victories were not quite as slim in this as depicted maybe in the press. And Pablo brought out the first reason, because of the province of Buenos Aires. And the second thing is Sergio Massa resigned from the Kirchner administration because he objected to bad policy. So as long as the policies are decent, it's hard to expect him to go against, unless something else comes up politically, to go against what Macri's doing, and so far, so good. So right, the longer term question is, are we going to get away from these big swings between heterodoxy and orthodoxy and have more of a more normal type of state where politics is politics, economics is kind of like in Peru, it's on autopilot. We have a long way to go until then. But just finally to your point about Macri and Mercosur, probably the best thing that happened to Brazil and Venezuela is Macri getting elected in Argentina.
Well, I think we move off Argentina. You can see there's a lot of pent-up emotion and feeling, and I guess in discussing Argentina always.
Well, it was not only me, right?
No, it's not only you, but it does give some glimpses to why it used to be. I don't know if it's still the case that Buenos Aires is the highest percentage of psychiatrists of any city in the world.
No, psychologists.
Psychologists, okay. Okay, so not everybody's going through mother and father therapy.
Prescribes.
Okay, that's great. Venezuela. And I'll just pause for a second. Venezuela. There's not an economic statistic that I know that looks positive. Surprise. Talked about surprises at the outset of this program. I think a number of people would have thought that opposition could win in the congressional elections. I think there would be significantly fewer people who thought that they would actually get to be sworn in and sit. And that seems to be the case with a few skirmishes. And not only did they win, but win with a supermajority that gives them extensive powers to affect changes. Now, in the waning days of the regime of the last Congress, President Maduro had passed in his Congress powers which, among other things, took away powers from the Congress to legislate with respect to the central bank. What can we look forward to in Venezuela, politically and economically? Are there opportunities for the strong at heart? And I suppose another question, particularly for people in this with us today, is what might that mean in the fallout from what's going on in Venezuela for the rest of Latin America and particularly its neighbor Colombia?
I'll be pretty brief. There's just 2 points I wanted to make. If you think about it, that right now Venezuela is essentially a failed state. So there are statelets in Venezuela, but not really a strong state. At best, it's sort of dual power. So the natural thing is to find where sovereignty lies, and sovereignty is increasingly lies with a wider group than the Chavista movement. It is now representing itself in Congress. It is in the streets. So the question is, where's the tendency? And so if one tendency in the opposition is a Capriles tendency, which is let's use the institutions, let's try to move things through a gradual glide path towards something normal. And then there's a Lopez, which is this is not working, and we're going to take this because it's not working. It's not the machinery is seized. I think the good news is that I think the Capriles school is still the prevalent one. And this is very important because there is a hope for some civil process here, which essentially leads to a negotiation with the Maduro, the same way there would have been a negotiation if he hadn't been killed with Ceausescu. I mean, it's that kind of process. How do we get this de-escalated and into a different reality? So that's the good news. The bad news is that there's no money. And the latest calculation I've been able to find is that essentially 6 months is left before they default. About 6 months. Now, there's some less liquid assets that probably could be, some haircut could be devoted to maintaining the debt of PDVSA and the sovereign, but that's what we're talking about. So I think that the challenge is that the time calendar is so short. And so even though the tendency is correct, the urgency is so dramatic. So those are the points I wanted to make.
Shakespeare couldn't have written a more interesting play than what we're going to see this year in Venezuela. I think the Maduro administration really miscalculated when they allowed Mood to take 67% of the Congress. I say that because they've been manipulating electoral results ever since the re-election of Chavez. So that was a miscalculation, and from December 7th till the sitting down of new Congress, there was a flurry of activity to try to sort of pass legislation to limit the powers of Congress. And so what you have is this sort of standoff between, Venezuela has a surprisingly sort of progressive and decentralized constitution. A supermajority Congress can fire the vice president, push for a recall, can force the removal of ministers, can remove judges, can override a presidential veto, etc. The question is, will they be allowed to exercise their constitutional rights in a country where the executive branch controls the media, the military, has set up essentially a parallel government with these community councils and tried to give it a face of legitimacy. And has proven itself time and time again to not respect the Constitution over the last 10 years. So I'm less optimistic that somehow reason and rationale will rule the day. I think the possibility of the sort of political impasse turning really frustrating as the money runs out and getting increasingly desperate is quite high. I mean, you're going to have the Congress passing laws that are then vetoed by the president, that are overridden in Congress, that are then challenged in the court. You're going to have the presidency pushing initiatives that are challenged as non-constitutional by Congress, that are then taken to the courts by the president, that are then defunded by Congress. These are the kind of political back and forth we're going to see this year in Venezuela. It's going to be zero political advancement as a result. And so then it comes down to the military. And the military is, like any big body, is divided between patriots who want to defend the Constitution, others who are so deeply involved in the transportation of Colombian cocaine to global markets. About 50% of it travels through Venezuela today, and those routes are protected by factions of the Venezuelan military. That it is a divided body, and who rules the day in the military may end up deciding which way Venezuela goes in moments of chaos. And this is where U.S. influence becomes important, because the U.S. indictment of certain military individuals, the DEA has flooded Venezuela with agents. They've got intelligence on everybody. Their ability to push for enforcement and to send a signal to the more neutral or patriotic members of the military in Venezuela that they better act accordingly because the days are over of old habits is going to be enormously important in terms of shifting Venezuela towards a more rational democratic path. On the other hand, you have Cuban intelligence, which was brought in by Chavez to infiltrate the Venezuelan military, because he always knew that was the only threat to his power. The Cubans, you can fault them for a million different things, but the Castros hate drugs, and they hate drug money. And now that they realize that they cannot rely on Venezuelan money anymore, and they need détente with the Americans, they are bending over to help the Americans. If the Americans are smart, they'll use the Cubans to make sure Venezuela chooses that more rational path. So it's, like I said, it couldn't be more Shakespearean. It couldn't be more conspirational theorists. Of all the sort of well-placed Venezuelans I know, they come back with the latest conspiracy theory. No one really knows what's going on, except maybe Diosdado Cabello, who's arguably the most powerful man in Venezuela. He provides banking security for all of those dirty military leaders. So he's got them under his thumb. And I'm not going to make predictions. Every time I make predictions in Venezuela, they're wrong. But I am more concerned about serious instability in Venezuela now than ever in the last 12 years.
I don't have much to add, but just one note. The military did, you're right, they allowed violations of the Constitution, especially with Diosdado Cabello not becoming president. He should have been after Chavez died. But he was face down. They tried to block the opposition for taking Congress physically, and the military clearly convinced him to step down, which means that it looks like these sort of the good guys in what used to be a fairly reasonable military, especially in a number of instances we see over the last 30 years, has the upper hand, especially if Capriles sticks to the Constitution, if the opposition sticks together and stays within the institutional framework and sticks along the Constitution. So it's a very difficult thing to predict, especially where they're going to get the money. I think people that were more optimistic about that have become more pessimistic. I don't think we have this prediction in mind of 6 months, but it's a tough road to hoe. Although they've already moved quite successfully in areas that no one expected any kind of movement.
Yeah, I'll try to be brief if I can. I will also be biased here. I think when you see countries in which it's not the son and the daughter or the niece or the nephew who's fleeing to the US, Canada, Spain, or UK to study and work, but the whole family is fleeing, that's a serious sign of distress. And they're not going to Miami, they're going to Winnipeg. They're going to the middle of nowhere because they're just literally looking for another life. I think we've seen that type of movement of distress for a few number of years now. If we invite to this panel here to Hugo Chavez, coming from being a mummy to being a panelist, we will all like him because he was a leader. And going back to my initial statements at the very outset about the 3 Ps, politicians, policies, and politics, the real politician probably of the last 50 years, the only man, the real man that had strong followers, natural followers, was Hugo Chavez. I didn't like him. I'm biased. But everyone liked him, even those who criticized him, even within Venezuela, within Miami, And just ask the Grupo Cisneros, if not. They say, he's a nice man. He's incredible. He can sell me anything. So he's gone, mummy or not. And I agree with Jonathan. I think the power behind, this is like, Louis XIII of Richelieu. It's not Maduro, but this, gentleman that, of course, the U.S. know that is a bit of that man in power. But I think the change is coming from within. It's endogenous. And if I could just go back to political science books and do a bit of a fantasy swap. Imagine Argentina and Venezuela. Why don't we swap them? We give to Venezuela and, the Argentine Congress, and Argentina will be booming here, right? So we get the Venezuelan Congress. So I think it's, the people are electing change, and I think change is irreversible. We saw this in this country, by the way. It's endogenous, it's invisible, and all those formulas coming from New York, Toronto, Miami, London, on Latin America never work. The formulas that work are the ones that are endogenously created in our countries. And I think Venezuela is already in structural change. I am, of course, of the belief that the wheel of structural transformation has begun. I also believe that it's going to be a lot of instability and violence and social unrest, but that's the path that the Venezuelans have chosen. And I think we're going to see at the margin a lesser number of families fleeing and those staying because they're going to be living change. So Venezuela will change. So it's up to us to see, we're going to be wrong if it's going to be 6, 12 months, but I think they're going to go. And it's about, stronger than in the Argentine case, a completely revamp, overhaul of a political regime. It's not about men or women here, men or women. It's not about the politician. It's not even about policies. It's about just changing that. And I believe the U.S. was wrong in putting those sanctions, by the way. And that's Pablo's view. So, but yes, the wheel of change is moving.
Thank you. If the chair's prerogative for a second, I just want to pick up on the last point, then we have to move on. And maybe it's a little bit in contradistinction to a little bit of some of the view in Miami on this is, imagine what would have happened in that election if President Obama, had done everything short of declaring nuclear war on Venezuela, which was he was getting urged and bullied into doing by a strong wing, not just Republicans in the House. What would the election results have been? Would Macri and Rousseff been as comfortable criticizing Venezuela? Highly doubtful. So to a certain extent, my view is that a bit of what's going on in Venezuela, if you want to count exogenous factors as well, is the restraint that the United States has shown in dealing with Venezuela against all pressures to make a big splash otherwise. Brazil. Brazil was a country that was supposed to be bathing in the post-World Cup glory. Everything was supposed to be great. They were moving on to the greater, building towards the Olympics, and that didn't quite turn out last year. Scandals, huge scandals of Petrobras and other sacred cows exploded. We've already talked a little bit or mentioned about impeachment. The economy shrank by at least 3.5, as I said, 3.7% before. Finance minister came in who was supposed to be, the panacea, and he lasted less than a year, and now they're on to a new finance minister. What's going on? And where are we going? Jonathan.
Oh, Jonathan.
Yeah. Well, yeah, then I'm coming to John as well.
Okay, saving the best for last. Okay. Well, what's going on is somewhat the same as, plus ça change, and in some cases quite unique, actually. Quite unique. So the panel last year, not trying to turn over the coals of last year's panel, but the panel last year was very down on Brazil and very up on Argentina. So in that respect, we were right. And anybody who went out and bought those Argentine bonds last year that I told them made a lot of money. Anyway, but the point is, the current equilibrium in Brazil is very unstable. This is the problem. So on one hand, we in the investment community and those who are looking at Brazil are waiting for the bottom. And it's actually very, very easy to construct a scenario where if you just changed a few things, Brazil would become roaring back. Brazil has all the ingredients of where two or maybe even just one policy change can turn the economy's trajectory almost immediately. Reasonable fiscal, sustainable fiscal reform, a following on monetary easing because of fiscal reform, and putting a line under the political miasma in Brasilia. Not hard to do, but isn't it? The other component of this is that unusually, every other financial crisis we've had of late has been when financial institutions get into lots of trouble and they don't lend money to anybody and the engine of the economy shuts down. But unusually in Brazil, it's the corporates that don't want to, that can't be trusted with the money from the banks. And so the capital strike is an internal capital strike in Brazil, and therefore everything is just stopped. And that's a real problem. So we all look to the political environment, and we are all then casting what odds are there that we can draw the line under the current political vacuum in Brazil, which is essentially leading them to multiple equilibria, worse and worse and worse. So I think if we're talking about Brazil, it's very easy to talk about, well, the CDS spreads are 500 plus, so we should buy, or the currency, it's at 4. I mean, my goodness, 4. It used to be 1.63. None of these things matter. The trap in Brazil is to think that there's a line that isn't essentially 100% based on your political beliefs about what can and cannot be done based on the political incentives of the main players in Brazil. So I'm painting for you a picture of how to think about this. I don't have an answer for you, but I will tell you the answer will not come in a spreadsheet. The answer will come on your best Machiavellian advice to yourselves or to the people you work for as to what can be done. Because every time I am there, and I go there a lot, although not recently, it's just over the rainbow. The center will hold, the people will come together, Levy will sort it out. There's always a reason why it should happen because it's not that hard to fix. The problem is that every time I go, it's always 3 months away. And the other problem is, it's not clear to me, and this is the key point I'll leave on, and perhaps John can follow up because I know we don't agree. I do not see why it is currently more in the interests of the opposition in Brazil to take out an unpopular government in a terribly difficult economic time now versus later. And the question is, how much damage between now and later? Over to you, John.
I don't know how much we disagree. But,
Oh.
yeah, Mark Twain said that history doesn't always repeat itself, but sometimes it rhymes. And we have a lot of rhyming going on right now. In terms of the economy, we haven't seen a Brazilian president so weak since the last military government, Figueiredo. He basically abdicated. And I wrote a piece called Happy 1984, because basically we're going to see in Brazil this year, 1984 again, where we have the private sector and the external sector adjusting, the beginnings of recovery going on, but really fiscal policy not doing its job and keeping inflation down. And that was really the beginnings of the march towards hyperinflation in 1984. However, the institutional and political framework is much stronger now than it was in '84. They were just the political framework was trying to move to a civilian government, and that really fractured any kind of policy. And the center did form. We were having very strong momentum to an impeachment or either Dilma stepping down for one reason or another, and there's a number of different ways she would have to step down, mainly through the Supreme Court, until the last 2 weeks of the year, where you had a number of things happen at the Supreme Court that basically put walls into her being impeached, or hurdles or speed bumps, but that's still quite there. It's still very strong, and the new revelations that are coming out of the investigation of the corruption are hitting her new chief of staff, Jacques Wagner, who is a very good political operator Good in the sense that he's excellent at it, not that he does good things. That is bad. The center is there still. That hasn't gone away. It's just taken out of the limelight. And it would be under a sort of caretaker government. This happened when Kohler was impeached, under Itamar Frankel. Under this time would probably be Michel Temer. And the opposition, there's different parts of the opposition that would support it and that would not support it. But the opposition knows that if everything tanks, everybody sinks with it. They can't jump off the boat because they're in the boat in Brazil, and they have to use some statesmanship. So, what are we getting this year? We have a change of finance minister, kind of, because the real finance minister is the president, Dilma Rousseff, and she's incredibly incompetent at it, and she's a very poor politician. The idea of Nelson Barbosa going in is he's more politically attuned. Well, is he more politically attuned to be able to get more austerity done? I don't think so. So the pressure needed to be there, and that was a bad sign. But the pressure is still there. Just listen to what she said over the last 4 or 5 days. So, we have a situation that's very chaotic. The center is formed. We're going to see a lot of, noise and things like that. But the center is there. And when politicians start to get hurt by deviating from the center, we're going to see movements back to the center. We've already seen it in the last 2 weeks. We won't see it fully until Congress comes back in the end, at the end of February, or after Carnival, mid-February. On that side. On the economic side, and this is not only true for Brazil, but this is also true for the whole region, other than the countries that are already open. The dollar weight is, and it's probably overshot any reasonable number for the adjustment to take place. But these countries should be taking advantage of this very weak currencies to open their economies. Brazil is the number one. Colombia comes next. And I think, at least in Colombia, you have a push for that. You do have a push internally in Brazil to do this. So suddenly, Dilma's discourse to save her presidency right now has gone back to talking about Social Security reform, all these things. So the center's still there. We've had a little bit of a setback. We're going to have more of them, but the center is there. When the center holds in Brazil, you get better policy. That's why we got Cardoso as finance minister and as president. That's why we got the Real plan. That's why, and we've had this deviation away, and this is the reaction to it. And pile on these other problems that made it even worse. But I think we are getting close to a bottom, but it's not as clear as it seemed to be back in the summer. Brazil at above 500 basis points, they didn't have a balance of payments problem like in the past. Their financial system is extraordinarily strong, except for the state banks, and even there, it's pretty clear to see how bad the problem could be. So and the external sector is adjusting, and the private sector is adjusting. The question now is, when will people invest again? And again, that's the harder part of this. But cheap assets, that's the cheapest. I just got back from Brazil yesterday. That's why I have this. Went to 90-degree weather to get a cold. So sorry about that.
That's why you got it.
That's right, exactly. But it was the cheapest I've been in Brazil in a long time. And you look at tourism. Tourism was a big problem in the balance of payments. No one's leaving Brazil. The flight back from Brazil was mostly gringos, not Brazilians. And the Northeast is just teeming right now with activity. So you can see the external side, the things that have nothing to do with the government pretty much, weak currency and perhaps some decent policy. And I agree with John. I think they can turn around rather quickly, not to become investment grade again. It's going to take some work. But certainly we have some very cheap assets on our hands in Brazil.
Thank you. Now, everybody has been seated here for well over an hour, and we are going to come up to the Pacific Alliance countries now. I thought maybe to break up the flow for a second, if there are any questions about the matters that have been discussed so far, we have a few minutes to take a question or two now. Anybody care about Brazil? Argentina, going once, going twice? Venezuela? Oh, we have a mic. Oh, okay, and then we have one in front afterwards. Okay.
Thank you. This is very interesting. My name is Tom Redeg. I work for Embrain. I'm Brazilian. John Welch. I came back this week as well from Brazil. It's almost sad to see what's happening over there. And I just want to hear your outlook on the impeachment. Is it going to happen or not? In my view, just say is nothing is going to happen in Brazil unless Dilma's out, or else we're not going to touch bottom yet. I'd just like to hear your view on that. How feasible is this impeachment, or are we going to have to wait till 2018?
Okay, before we answer that, let's
take a couple.
take a couple questions and we'll group them together. We have in the front, and if you wouldn't mind just raising your hand. Okay, great. Thank you.
Thank you. Just more so a bit of a comment just back on Venezuela, and I think sort of one of the signposts that I would be interested to hear on how you guys think we should interpret it going forward. I totally agree that the military involvement is key to sort of how the great drama plays out. It was interesting, though. It does seem very much so that the military is on the side right now of the Congress. You know, a lot of the results were very close, and it would have been very easy to fudge the results. And in some cases, only 100 votes were actually the deciding factors there. What are the key things? I guess 'cause I personally believe that support will be essential for sort of the trajectory to go sort of relatively bloodless. What are the signposts that us as investors sitting here in Toronto would be able to watch for, as the relative opacity is quite apparent there currently?
Thank you. We'll take one more with this group. Anybody have something other than Brazil? A hand is in the back.
Hi, good morning. I'm Raziel Zisona, one of the directors of the CCA. When I think of Venezuela today, I go back to the time of Chile, and the question I want you to focus on is Venezuela has lost a huge amount of human capital over the last decade or so. With Chile, at the same time, the Chicago Boys came back, and Chile was able, in a sense, to harvest knowledge from around the world when Chile refashioned. I view the situation in Venezuela possibly as an opportunity, maybe not if we look solely as an endogenous development in Venezuela, but the whole Venezuelan exile community and maybe Canada itself may have a role in helping Venezuela restart in a proper way. I'm not saying the problems will be set aside. There'll be huge problems. But viewed with this way, they may have a horizon to seek to attain in that way.
Thank you. Okay, we'll go to the panel now for responses. Who would like to start off? Join it.
I'll do the impeachment. Okay. Well, there's impeachment and there's other things. Right now, Dilma faces three ways that she can lose her seat. First is the impeachment, and that's the hardest road, because what we got, it basically goes through Congress. The lower house has to vote whether they want to go ahead after the proposal of impeachment was accepted by the president. The lower house, Eduardo Cunha, also has his little problems with corruption and things like that, and investigations going on. If there's a two-thirds majority, then it goes to the Senate. There's still a question as to whether the Senate automatically has to take this on, or now that they've ruled that maybe the Senate can reject even going ahead. There's still there's probably going to be a lot more in the Supreme Court when comes February about this, because the way it was in the past, it was quite clear in the way the laws were created that the lower house authorizes, the Senate has to do it, has to follow through. But there's two other things. Very clearly to me, Dilma Rousseff and her regime violated the law, the fiscal responsibility law, among others. And any executive that violates the fiscal responsibility law faces criminal charges, not just civil, criminal. There are two cases in the Supreme Court, and that was they took a minor one of them as the raison d'etre of the impeachment process, with state banks lending to the Treasury during 2014, 2015, and before. But there's a number of other things one of them has her signature on it. She authorized expenditure in 2014 in an election year that wasn't authorized by Congress, and that is just we can go along the huge list of violations of the law, but that one really has her signature on that, and that is at the Supreme Court, and that is there are 5 lawsuits against her on that particular violation and others. Then we have the Supreme Electoral Court. There's very clear indications that money from Petrobras was money laundered into her campaign in 2014. And that would impugn the whole election of everyone that received campaign money, not just her, but her vice president, but Michel Temer's a constitutional lawyer, and he already has his defense ready in case this happens, showing that his finances took none of this money. But it also includes Congress people. So there's three ways that you can leave. And really, it comes down to the politics and governability. The Supreme Court is the main arbiter in this. If the Supreme Court sees that popular opinion wants her out, and they're facing governability issues, which we've had a couple of crises of governability, they will probably act in one way or another to negotiate her exit, not necessarily through an impeachment process, by a resignation with the promise of her not going to jail or something along these lines, or her best friend and biggest enemy in all this world, former President Lula. So I still give this 55% probability. Now, it's down because of what happened in December, but I do think she is not going to finish her term. Her latest decisions have been very poor, despite the fact that it looks like it's put off her leaving office, actually, I think it may hasten it in the end because they're bad decisions.
I just want to move on to the Venezuela questions quickly because we have to move on.
And that's a good thing, by the way.
Did you want to deal with Venezuela?
I could do
Okay,
Venezuela.
we have to do this quickly because we have to.
Yeah, I could do Venezuela, but just again, 30 seconds on Brazil. I think goes back to potential regime change. If we start thinking about Brazil as really, not as a Latin American economy, but really one of the systemically relevant emerging market economies out there, which it is, with a strong industrial base, with 200 million people, and the single largest market in the region, we have to think that outside of the Latin American landscape. And we can see a parallel of Gotham City in Brazil, but without Batman, which I don't think that's the case. How many cases have you seen in Mexico about top corporate leaders involved in acts of corruption going to jail? Anyone raising the hand? I don't see anyone. We will never see that. So Brazil is setting precedent of structural change in the judiciary the way we like it. So why we're criticizing that? Because we are impatient. Jonathan is impatient. He has to show returns to his investors today and tomorrow and the 3 months and 12 months. But maybe Brazil has planted the seeds of structural transformation of judiciaries, that's something that this period of zero interest rate environment that will go for a long time, it's an opportunity for Latin American economies, out of which Brazil is the most important. Again, comparisons. Mexico is greater than Brazil. The spread said that 3 times wider Brazil than Mexico in 12 months. But reality is the legal leaders are sending corporate leaders who are corrupt to jail. I'd like to see that in Mexico one day, by the way. And I will just buy Mexico immediately. So that's one thing. On Venezuela, I think Venezuela, we can start, 2 things that I would like to highlight. Again, is the endogenous change, and the other one is the role of the US. And we have a major uncertainty this year. It's called US presidential election. And besides all the entertainment that certain candidates give us, and inflaming those who are more emotional, day by day, because of his comments, this is very important. And policy towards Venezuela can be also a proxy of what policy will be to Latin America, including Brazil. So it's very important, the presidential election, as an event for most countries in Latin America, beginning with Mexico, no doubt, but also Venezuela, Colombia, and Mexico. And Brazil, yes.
Thank you. John?
You asked what signals to look for.
What are the road signs that you should
So right now you've got a mood that controls with 112 seats. If they lose one vote, one of those seats, they lose a supermajority. So the government is going to be doing everything it can, blackmailing, paying people off, whatever it takes to move a couple of those votes. The opposition is using the street and using voices outside of the country. There's all kinds of websites that inform people based in Miami and other places to try to convince government, the more moderate Chavistas, to move to their camp. Whoever wins that It's sort of like a parliamentary battle. Whoever wins that and holds strong and holds united will ultimately win this process. Now, there are rumors now that Diosdado Cabello is in private talks with the opposition. If he begins to position himself the opposition, that will be a huge tidal wave of change. And a big factor, to Pablo's point, is what the Americans do. If they keep the pressure on, and I actually think that, okay, the Americans didn't sell the sanctions well, and the Venezuelans went screaming and saying, you know, we're being treated like Iran. It wasn't a national sanction. It was a sanction about 7 people. And by the way, the U.S. has sanctions over 1,000 people around the world who run drug money, who finance terrorism, what have you. I actually think it was a really smart move. It wasn't well communicated, but it's sending the right signal to the people who are dirty but have the choice to no longer be dirty or no longer act against sort of democratic principles. If they can keep the pressure on in an electoral year, and that's a big if, that will help the process. But I would look for that, people like Cabello and others, where they vote, and the ability of Mood to hold strong with 112 seats and how they vote will be the key.
Thank you. Yeah, the one other thing I might add to what John said, the main mechanism now they're using to nullify the supermajority is the challenges to the 3 seats that are in the courts right now. And there's one challenge to one of the official government candidates, but you need to do the math on that one. And then we're going to get into this cycle, this horrendous, vicious cycle about the courts and the legitimacy of the courts, because the appointments that were made to the courts and the, usurping the rights of Congress, et cetera, et cetera, et cetera. That seems to be the main line of attack right now, the legal line of attack, as it were. Pacific Alliance countries. Both Chile and Peru registered slight upticks in 2015. Colombia's growth was off by 1.5 from 2014, but still was the highest of the 3, registering a growth of 3.1%. In 2016, both Chile and Colombia are predicted to duplicate their 2015 performance, with only Peru registering any measurable uptick, though still less than 1% of its growth from the past year. Different factors come into play in each country, and I'd like to sort of walk through each one. Again, we're a bit constrained for time, but why don't we start off with John? Why don't you talk about Colombia? You talked about Colombia before.
Well, yeah. Again, their main challenge is fiscal at this point, and the current account. It's reflected in both places. I'm not as worried about the current account as we see underlying changes already happening. And the fiscal side, well, Colombia never moves as fast as the market wants it to. It always moves kind of in the right direction, except at the end of the 90s. And they're moving now, and they're going to bet. They have some leeway according to their fiscal responsibility law. Well, they're going to try to get to their fiscal deficit targets by 2018. They're going to accommodate a fiscal number of about a deficit of about 3.2% this year. They're within the legal boundaries of that law. Their main concern is tax revenue. Despite having rather high marginal tax rates in different areas, especially in the corporate side, their tax burden is 20% there right now. They want to move that to 27% of GDP through this tax reform. A lot of it is getting rid of loopholes. Like all tax systems, you start out with a simplified one, and just over time it naturally balloons in this complicated mess of bad incentives. So that part of it is removing deductions. There's a huge myriad of deductions that go from mortgage interest to all the way sort of very, very strange sort of special regimes for a number of different entities. So they're going to move that. And they want to increase the rate. They want to increase the value-added tax rate, increase the base, and get rid of duplication, and then cut taxes where the incentives are very poor, especially on investments. So you still have the highest withholding tax rates for foreign investors in fixed income in the region. So there's a number of things that they're going to do, and they're betting that they can raise about 2 percentage points of GDP or get that to have a higher tax burden of 2 to 2.5. They've been cutting expenditure, but less than the market would have liked. But however, that's that's a hard thing to do. They're cutting it. They have regional elections. They were waiting until after those were done to get a little bit more on that front. But I think they're going to be focusing more on revenue, which is a little bit of a disappointment, especially from a market standpoint. The final thing, and we hear this off and on, but then it kind of disappears, is with dollar Colombia at 3,300. They should be opening their economy. They are one of the more closed economies, Brazil being the most closed of the big five. And the prospects for, and Colombia isn't really formally yet in the TPP. They have to be invited. But it looks like that's going to happen anyway. But I think the prospects for them adjusting, iterating themselves to better policy, which is the typical Colombian way to do things. They were the only country not to default in '82. But they kept themselves not too far from where they needed to be. So things look pretty good in Colombia, although it's going to be, we revised down our growth forecast below 3, just below 3 for this year. But still a decent performance.
Anybody else want to quickly jump in and say something about Colombia? Okay, let's move to Peru. John.
For the first time in many years, there is not a scary political scenario in the next election. So whether it was Ollanta in the past or Garcia, investors were scared of the possibility of what those governments would bring. And nobody is shaking in their boots right now, given the lead candidates going into the Peruvian election. That said, Peru is a really difficult place to govern. So yes, as long as you keep the miners alone, the cash flow will keep coming. But how it's distributed and how well that money trickles down to local communities, Peru has a legacy of problems of one of the most centralized governments in the region, where money stays in Lima and Limeños and coastal communities do well, and on the other side of the mountains and in the mountains themselves, there's abject poverty. So you have a part of the country that has raced ahead and modernized and gained significant wealth advantages, and a third of the country that hasn't really changed in a century. And that is a political liability that's not surfacing in this election, apparently, but will remain in Peru in the long term. So, for short, medium term, for investors, I think Peru will continue to be a great place. But for people who have to operate in Peru, people who have to operate mines, who operate businesses, particularly away from Lima in the hinterlands, it will continue to be a complicated place to work.
Anybody want to jump in on Peru before we move to Chile?
I can just start.
All right, you'll do it. Go ahead.
No, 10 seconds on something on Peru. 10 seconds. My 10 seconds are just like
okay, go.
Weird. Just one metric that I would like to, those who are involved in Peru, and I work for a financial institution, and of course we monitor credit developments from a pure economic perspective, from a banking perspective, and just one metric. Local currency lending in Peru over the last 12 months has increased by 30%. Okay? And US dollar lending has decreased almost by 19% over the last period, which means gives you a net of credit expanding, by 10% on a yearly basis, which means that Peru has affecting structural change day by day, week by week, month by month, to de-dollarize the economic structures. And that is a major and positive development for long-term investors. That allows the development of domestic capital markets in their own currency, SOL, allowing investors such as Jonathan and his team to invest not in US dollar paid bonds, but local currency securities. That is a positive development, allows Peru to move to develop pension funds such as Chile has been doing, very successfully over the last couple of decades, and we in Canada know what pension funds do. They're very rich as well. So I think that's something I would like to also from a.
So segue right into Chile, Pablo.
And we're going to Chile, and that's one of their major strengths. Really, they have a lot of money inside, right? So again, I've been working for a financial institution for almost 22 years, and the most engaged financial institutions from the United States, Spain, Brazil, and Canada are in Chile. That's a fact. And why? Because Chile still is the best credit in the region and clearly highlighting a lot of potential to develop business. And these are not necessarily from a capital market perspective. This is just from pure deposit-taking banking business. So Chile is in certain segments, very developed and very mature. We compete, we're there, and we compete with the best. Okay, that's one starting point. So, and when you just put that in metrics about financial markets, Chile continues to be, the safest and, with low debt and strong domestic savings. So everything that can be said, and I will mention negatively about Chile, has to be put into the context of that structural strength that the country has. Yet, it's a small economy located in the South Pacific side of the Americas, right? So developments around the neighborhood in Chile, and that's why it's a factor that nobody talks about it. We can use it the Southern Cone revival, which includes Argentina, which includes Brazil, and the combination of both, in my view, can be looking forward a good positive development for a country like Chile to develop more potential for Chilean corporates, for Brazilian, Argentine corporates to do business bilaterally, and also, so a lot of potential Southern Cone used to be called the ABC potential Southern Cone. So that's one. Quickly on the economic side, very low growth. It's a very trade-intensive open economy. 2% growth this year, 2% next year. Inflation a bit above the norm inflation target, pushing the central bank in a very orthodox ways to increase interest rates from low to a bit less low, so it's really, really irrelevant. Credit continues to expand. El Nino effect, was not as severe, and of course we're still living the cycle, affecting both, Peru and Chile has not been as damaging as it was in the last episode in 1997/98. So that's a positive. And then I can just say something related with political issues, and of course the administration of Michelle Bachelet received the mandate to do something. And that mandate was not to stabilize, prices like in the case of Brazil, or lower fiscal deficit, like in Argentina, or change. It is just to address a deficit that the country has had, which is situations in the education and labor market. And that's what they're doing. It's not probably a smooth ride, and Congress is some resistance, and the market doesn't like, when somebody has to hike taxes to fund education. But if you just put Chile in the context of OECD peer group, Chile is not doing well. So, and I think it's good for Chile to compare with the best in the world, not to follow models developed in Washington, New York, just by basically comparing with the best practices. So education is important, reform. And the other element that I want to highlight is, just society demands endogenous change. As you may be aware, many countries in Latin America still have mandatory voting, right? And some others have just non-mandatory voting, Venezuela being one of the countries which you're not, obliged to vote, and that's why we have a major turnout. In the latest election, that ended in the administration of President Bachelet, the Chileans went to vote, but with the lowest turnout ratio probably in most developing countries. Closer to, it was a bit higher than 40%. So that indicates, to me, is an indicator of disenchantment, not with the government, but with the system. Okay, and that, in my view, I associate that to issues related with what we in financial markets consider soft, which is, they're not soft, we know, education, access to education, access to, to well-paid and highly trained jobs. I think it's a great opportunity for Chile, really. I'm extremely positive, and that's why top institutions such as ours, I'm not just selling Scotiabank, but really, because we compete with the best, are there because of the potential. We're in a terrible cycle in terms of trade shock, copper price decline, blame it on China, blame it on excess capacity in mining around the world. But Chile is there, will remain, is solid, and we're there for the long term.
Thank you very much. I want to go to Mexico now. And I really can't think of a country in the hemisphere where there's a bit more of a disconnect between what the sentiment is about the future of the country internally versus what the view of the potential of the country is externally. Quoting from President Peña Nieto's State of the Union only 4 months ago, and he said, quote, "Our country was deeply hurt by a series of cases and terrible events that have damaged the mood of Mexicans as well as their confidence in government institutions." From the outside, outside investors and those who are doing business there are heartened by the fundamental changes that President Peña has brought over the last couple of years in a number of oil, gas, electricity, telecommunications. The growth last year was 2.5%. It's still projected to be 2.5% in the coming year. And it also happens to be one of the enunciated priorities of the current Canadian government. And that was clear during the election. It was clear in a policy platform with strong endorsement of NAFTA and Canadian destiny tied up with the success of NAFTA. And with the renewal of relations, a strengthening of relations between Prime Minister Trudeau and President Peña, with meetings amongst them coming up in the next several months. So, Jonathan, can you help us understand why there is this disconnect and what your feeling is?
Well, I mean, different people want different things. The dilemma in Mexico, to my mind, is that the same reasons why Peña Nieto was really toasted by foreign investors are the reasons why he is viewed internally as old wine in new bottles from the point of view of political governance, law and order, and the rule of law in general. So in the first instance, you needed the old system to change the system. So we had divided government for 2 terms, and it brought us essentially chaos from the point of view of policymaking and inertia. So there was never, under Calderon, there was never even the whiff of a chance of real energy reform, because there was absolutely, I mean, Mexico's political environment is hard enough anyway, given its structure and the frequency of elections and the terms for congresspeople, et cetera. But certainly with a person who does not have the full confidence of the governors and into a majority of the regions, there's no way that something like that's going to happen. So the system needed to be unified to change. There was enough external pressure, enough internal pressure to make energy reform the thing to do. The problem is the instrument of that is the old PRI. It was sold as the new PRI, but it's the old PRI with a new face. So we are past the key 2 or 3 decisions, which has probably put Mexico on the pathway for a higher potential growth rate over the next 5 years, perhaps to 3+, which would be an accomplishment. It has been a fillip to local manufacturing and to industry in general to have lower prices for energy because of pipelines that send gas down from Texas, Toluca, I think it's called. The presence of private investment in onshore exploration and development of energy, all to the good, makes Mexico in the areas in which it's competitive, more competitive even as it relates to Canada, as we are learning in the auto sector. But then when we turn to some of the factors that Pablo was referring to, longer-term endogenous change to actually root a sustainable modern economy, which requires institutionalization, which requires a sense of confidence in the rule of law, it's been mute. So it's really been an intergenerational transfer. We've gotten a lot done here at the expense of what's going to be in 10 years in Mexico. So I'm very, very positive about Mexico as an investor, and very positive about the things that I see over the next 2 to 4 years. But I'm not positive that the really key underlying political governance questions in Mexico, we've even scratched the surface, which I guess is in contrast to Brazil, but we haven't scratched the surface, we've punctured it with a
kebab skewer, and now the blood is spurting out, and everybody's wondering whether the patient's going to live. A very different scenario.
Bludgeoning would be the word, maybe.
Kebab skewer.
Yes, next, please, Pablo.
Yeah, I want to leave everyone just to comment. First of all, Mexico is in North America, right? As I said, I was born in Argentina, and when I went to school, North America was 3 countries. I moved to Canada and realized there were only 2. And but really, Mexico is part of North America, and the U.S. economic cycle, which is robust, strong, and I quote Yellen, 13 million jobs, since the bottom created in the new digital era. Tell me which country has done that? Nobody. And Mexico benefits from that, and we in Canada benefit from that. Full stop. Okay, so then U.S. business cycle, U.S. low interest rate environments, U.S. benefiting from oil price which hit yesterday $32 a barrel. Anyway, all of that benefits Mexico, no doubt. Second one, we saw that an inflation rate approaching 2%. Who would have thought in Mexico? I started to question that because I'm an economist. How can you do that? So your currency depreciates, 15%, 14%, and inflation is 2%. I don't know. We'll have to just review how we measure inflation. But really, Mexico benefits from that. The Banco de Mexico and the central bank, Agustin Carstens, just follows the Fed. They're just like a clone. It's a mirror copy for now. We'll see for how long. International investors are there. Between 40-60% of holdings of a local currency, fixed income securities, either on the 1-year term or just up to the 10-year terms. There's a lot of foreign holdings. Jonathan will tell us which percentage of that is U.S. based. I would say the bulk. So whatever the Fed does, as I said at the very outset, with the bond portfolio, not with the Fed funds rate, it's very critical. That may create some degree of tension, repatriation outflows, but doesn't change the structural gains that Mexico has gone through. On reforms, I celebrate, I trumpet, I just open the bottle of Veuve Clicquot to celebrate the telecom reform. The telecom reform has helped, inflation to come down and has introduced something that I would like to see in every single sector in Mexico, which is called competition, which we don't have. We have a lot of concentration of private wealth. I don't know why certain men are celebrities in Mexico, but being billionaires and the largest billionaires in the world. That is not sign of a well-developed modern economy. We need competition in every single sector in which Mexico is strong. And Mexico is strong in many sectors. Energy sector reform, yeah, that's good for Houston, Calgary, but really other sectors are very important. The utilities, the petrochemicals, infrastructure, and great opportunity for Canada. But again, they have to open us the opportunity to go and compete. And that is microeconomic structural reform. And that is what will increase 1-2 percentage points in the GDP growth rate over the next 10 years. We bet on that.
Start off with a discussion of data. Certainly the numbers, the GDP numbers in Mexico are a little bit disappointing compared to every year we come up with a forecast, and everyone does this, you have to revise it down. Like all countries in Latin America, Mexico's been working at improving their data. I'm talking about the quality of the data, how much they're serving. I think their GDP data still needs to be improved a lot because there's a huge amount of activity that happens away from the city centers, and that is a product of NAFTA and the opening. And you see it in the unemployment numbers also. They improved the INEGI has improved their SMSA data collection, but it's still, I'd say it's behind Brazil and certainly behind Chile. Peru about the same. But really, we really need to get much better data. And I think when we get that, we saw a massive improvement in data in Brazil where they're actually finally measuring service sector output the way that you're supposed to instead of using proxies. In Argentina, the proxies they used to use were amazing, like ads for tourism in the newspaper and things like this. But Brazil had just a population proxy. That was it. It was terrible. They're measuring it. I think once we get a better set of GDP data, I don't think the GDP numbers are going to be that bad. Second, I'm going to diverge a little bit with Jonathan on this one because we now have a real participatory democracy. Yes, the judicial system's next. It took Brazil 20 years to consolidate their they're, after going from a military government to having a truly competitive Congress that actually does some good things, mostly good things actually. In Mexico, they went from a rubber stamp before Cedillo. And Cedillo to me, President Cedillo is the George Washington, and I'm American, although I don't know anything about the United States, of Mexico. He refused to take the reins of being a sultan. He said, I'm not going to do this. The way George Washington did when they wanted to become an emperor. He said, no, I resign. Sorry, I'm gone. We fought too long for this. So Peña Nieto didn't just send a bill to Congress and have the old rubber stamp. He had to negotiate with both the PAN and the PRD, and he did it brilliantly. One of the things that he did was really do that. And we've seen, I remember back in the late 90s going to Mexico and asking, when they really started to use Congress, I say, do you ever have outside specialists come in and testify? No. Do you have any staff? No. In Brazil, even during the military government, the Congress people kept all their staff. They had staff economists, staff lawyers, etc. Mexico had none of this infrastructure. Now they do. Next is judiciary, and certainly it's certainly wanting in the rule of law. But we had a transformation. I know the analogy with old wine and new bottles, but Peña Nieto had to show himself to be a real politician instead of the old sort of sultanic and I think that's all for the better. I think that's really quite good. And finally, one final comment. I think Augustine Carstens has been much better than the Fed. I used to be the Fed too. So.
What's the expression? Mexico, tan lejos de Dios, tan cerca de Estados Unidos. That sort of that bifurcation story is just so evident today. A country that opened itself up, opened its currency, opened its trade, created a world-class manufacturing sector, world-class and competitive national companies that brought in, Cemex. The dirty secret about Cemex is for years they had a little building off to the side of the headquarters filled with about 35 Boston Consulting Group consultants who put together all their deals, all the acquisitions they did around the world, modernized their entire. Cemex is by far the most modern cement company. From Monterrey, they're able to control every factory around the world through satellite. So you have that in Mexico, but you have, because of a lack of judicial reform, because of incredible corruption between the political and legal enforcement classes, so on your way in your brand new car, because now you can buy 350 models of cars from 50 different car companies, to your brand new factory, you might get shot by a guy who should have been thrown in jail 20 years ago and has been arrested 5 times, but the judiciary can't indict the guy. So this is the dilemma in Mexico, and I would love to believe, John, that I totally agree that it was that 1997 Cedillo, the PRI lost control of the Congress, and they didn't know what to do. The rubber stamp was over, and they didn't know what to do. And through 15 years, we went through basically no progress. But the tactics that Peña Nieto took on to pass his reforms included cutting off funding to special projects that put money in the pocket of politicians. It included blackmail techniques. It included every dirty trick, which is what was needed to pass those reforms. But in the process, Mexicans are the most politically skeptical people in the world. I remember I was in a focus at a market research conference in Germany, and somebody presented focus groups of 16-year-olds from 20 different countries around the world. And the most politically cynical 16-year-olds were Mexican Chilangos. So you have a country that has access to perfect information through the internet, but a political class that's still using old-fashioned techniques. And what the risk politically in Mexico is that we go from one of the most politically stable countries in the region to a country where party affiliation is in rapid decline. And the real possibility that we have a sort of populist, personality-driven political class emerging, whether it's Bronco out of the north or other personalities, that shakes up the political class. It may be a good thing, and maybe it's part of the process, but I am concerned that the ability of the political class to listen to people, to respond to the embarrassment of a more objective and less controlled media, the fact that they're not responding to that and they're not changing their behavior is what worries me. And so the shiny capital on the hill of this country that has modernized itself but has at its root a unreformed, corrupted political class is what concerns me in the long run over Mexico. Short term, if you keep your investments out of politically sensitive areas, manufacturing and other areas, you'll do fine. But when you get into those politically where regulators can come down on you and who knows what powers are behind that, you're still at risk in Mexico.
Thank you. We haven't touched on Central America or the Caribbean, but I think this is we've come 2 hours, and I definitely want to have time now for those who want to ask questions about the Pacific Alliance countries, the ones that we just covered from the last time we did a round of questions. So, and the Andean countries, Mexico. And if you could also state your name and identify your affiliation. Thank you.
Hi, my name is Eduardo Harari. Currently work with Scotiabank. My question is more in regards to Canadian outlook and Canadian foreign policy towards the Americas. Where do you think the Trudeau government is going towards that area, having that he put in consular services for Canada someone that is very knowledgeable of consular duties?
Okay. Another question. Andrew?
Andrew Shisco from the Canadian Commercial Corporation. A question about Colombia and the peace process, which we are all following with enormous interest. And it's actually an economic question about what's your view on the capacity of Colombia to allocate the financial resources and borrow for the huge investments required to demonstrate the benefits around the country of having, we hope, a peace in place and a presence of the government in parts of the country where they didn't have a presence before.
Another question. Perhaps the last question of the day. Going once. We have one.
Good morning, Fabiola Sicar from Scotiabank. You spoke about the Pacific Alliance countries more individually. Is there any happening between the countries, or is any happening for the alliance itself?
All right, I'll allow one more. That was a good one. Okay, let's go with it. Colombian peace process.
Actually, the Colombian peace process has made some major steps lately. You had an announcement of an agreement in principle 3 months ago. It didn't seem to be that strong and binding. Certainly, it proved not to be all that strong. But it's looking like they're going to have an official announcement in March. You're right. The fiscal that addition to their other fiscal challenges could cost them between 2 and 5 percentage points of GDP. They would have to come up with. And they're hoping that this tax reform will be able to take care of some of that. The government then would need to either put it to a referendum or a plebiscite after it passes Congress. Actually, the momentum behind this is stronger than I thought it would be at this point. In popular opinion, it's very strong, the support. Whereas, despite the fact you have a lot of recriminations about the lack of penalties. But in fact, this is a much stronger agreement to prosecute criminals in this, especially on the FARC side, but also on the paramilitary side, than either of the two prior agreements, the one in 2004 for the paramilitaries, and the one in 1990 around the MR4. So there are criticisms that you're basically letting murderers off with an 8-year sentence, which is the maximum sentence on this agreement. But it looks like the popular opinion around is they just about had enough with the FARC, and the idea is to move on. In terms of referendum or plebiscite, it looks like the government wants to go to a plebiscite. The difference is they won't be agreeing. They'll just be yes or no vote. It's like fast track. You agree with it or you don't. And that would come later in the year. But it looks like March is now the focal point. And I would say that this is a very good thing. I think the marginal benefits economically are smaller, though. We've had already the major improvements in the economy and commerce, et cetera, by just having, Uribe's pushing the FARC back to the hinterlands. This dividend is already there. So I think the government, especially Minister Cardenas, is a bit optimistic about how much more growth they're going to get. But they're definitely going to get more growth, and it's a good thing in the end if they can make it stick. I don't have the ability to evaluate how the implementation process and how much they're going to go. But I think the kind of their ability to fight the FARC was quite effective. I think implementing peace should follow sort of suit in that. And there's going to be rogue elements of this, right? There's going to be the business part of the FARC. You're not going to have everybody agree within the FARC. Those that make their money off of narco-trafficking long ago left the political side aside just to make money are still there, and certainly the support they've gotten from Venezuela, and this has not been very helpful. But the sort of change in dynamic there also makes for the higher probability of peace.
I think it's really interesting to speculate the external players and the role of the external players in this process. So the timing of that announcement 3 months ago was one day after the Pope left Havana. Now, I believe that the Vatican only agreed to going to Cuba and providing some degree of legitimacy to the Castro regime by, in return, they got from the Cubans a commitment to keep the FARC at the table and keep them negotiating. You couple that with the fact that Venezuela can no longer afford to support the FARC, and I think that the FARC, the mindset of FARC leadership, although it is a very divided group, has come to the realization that peace is their only out. And I think in the past they could survive without peace. So that's very positive. I think once the peace agreement is signed, et cetera, attention will turn to what is really the chief security issue in Colombia today, and that's the border with Venezuela. And all of the contraband traffic and the gangs that control those corridors of trafficking of goods, basically cheap gasoline into Colombia and goods into Venezuela. It is a Wild West no man's land that nobody talks about, and hopefully the Colombian military, without the FARC to worry about, can focus on securing the border and bringing the rule of law to that part of Colombia, because that is a growing problem.
Very quick comment, just on the costs of peace. I mean, I think it's important to remember how much the costs were of war. I mean, it was an immense draw fiscally on the government of Colombia to pursue. This is under the sort of high Uribeism, and it was also a cost from a human capital point of view. You had basically people in the prime of their lives being sent out, to swat mosquitoes the sides of Oldsmobiles, instead of being in college or being in their first job. So I think, overall the costs are probably going to be lower of implementing peace than trying to implement the first stage of Uribe's campaign against FARC.
Thank you. With your permission, I maybe take the first crack at the question about the America's policy under the Trudeau government. During the campaign, as you very well may know, the Prime Minister, a candidate, then made a strong speech about the importance of NAFTA reinvigorating the relationship with Mexico, and it was also part of the party plank. The platform, it was a plank in the platform. And in the debate that we held several months ago amongst the party leaders, that was expressed again. So a lot of it comes out of it, though. What we've heard a lot is about NAFTA and Mexico, but we haven't heard anything about the other parts hemisphere. It's clear that the folks in Ottawa are working hard in developing Latin American policy. There's no indication now that it will be a pillar of foreign policy as it was under the Harper government, but that doesn't mean, and by any stretch of the imagination, that it will be ignored or not considered to be an important aspect. We also know that there are people close to the decision-making process there who've had have had experience in Asia and are enamored a bit more, or certainly feel that developing Canadian relations, and particularly business and trade in Asia, is important. We agree it's not a zero-sum game, but the fact of the matter is, at this point, the investment in Latin America far strips the investment and trade that Canada has with Asia, far outstrips what it has with China. So, and that's a point that I think the government hopefully will take into consideration in developing its policy. But it's still too early to comment. Again, a positive signal is it appears that President Peña Nieto will be coming to Canada at some point this year. And those relationships that relationship will be strengthened. But I think as soon as the policy is developed, we have to remember it's a foreign policy apparatus. In other parts of the government, they're still filling positions that haven't, including those who are involved in doing this hemispheric thinking and policy making. But what I can say is, when policy comes out or starts to be made, that we will have an event on it. And we will have people talking about it once we have something more concrete to talk about. Yeah.
Just to piggyback on your comments, I had the opportunity to be both in Washington and Ottawa over the last 3 months, and speaking with people involved with the peace process, including just sharing a dinner with Bernie Aronson, who is the U.S. envoy to the peace process. So clearly March is an issue, and it's going to happen. Of course, there's some skepticism, among certain political and corporate leaders in Colombia about, the outcome of the plebiscite. So what's happening the day after, So, and as John highlighted, the security aspect in Colombia today extends well beyond the FARC, right? So in this respect, it's very important also go back to who's going to be the president of the United States. Colombia is a very important nation state for the U.S. So then, whoever is elected and what the foreign policy of the new government will be towards Latin America in general, Mexico and Colombia in particular, are relevant. So again, it's a question mark beyond Colombia. From a Canadian perspective, in my so far interaction, with members of the newly elected administration, clearly Mexico is the focus, not because there's neglect on other countries in the region, but rather because perhaps the timing is not there yet, so to see who is my interlocutor in Brazil. And in Argentina, I know that is Macri. Well, Macri has to do a lot of things before just probably coming to Canada, but I would envisage that probably a better relationship between Argentina and Canada will happen as soon as this year. And Chile and Peru, there will be also opportunities also for interchange at the head of state. But really, it has to go. The world is so turbulent right now, and with global climate change, with security, the G7 summit coming in Japan, I think Canada has other priorities, and I'm putting Mexico at the very top. I think it's very wise at this stage, but again, quickly say it's not a sign of neglect of the current administration, but rather just a bit of a pecking order of priorities given circumstances and events.
Thank you, Pablo. The one thing I would add is, in the first opportunity, I think, to make a symbolic statement, and that would be the swearing in of President Macri in Argentina, which was attended by the presidents, I think, of all the Latin American countries. This government worked very hard to have the highest representation they could get. And they were obviously the first days of the administration. They couldn't, but it ended up being Joe Clark, who was sent to represent Canada, who is actually very well respected in Latin America, his work at FOCAL and the think tank and other Latin American matters. And so the government understood the importance of the Macri election. and wanted to signal not just to Argentina, to the hemisphere, that that was something that they were keeping an eye on and something that they were going to express what their view was. We're over time, and we haven't dealt with Central America or the Caribbean. If people, I think we can spend a quick what's that? Yeah, we spend we'll do 5 minutes, and it's not that these aren't important areas. It's just that because of what's happened last year and this year, we spent more time on the countries, the large countries that are going through a major transition. So, do you want, John? You want to talk 2 minutes about the Caribbean?
It's like last year. The prospects look very good for the Caribbean, and John spoke about Central America, except for Trinidad and Tobago, which is having a little bit of problems, more like a Latin American oil exporter where they overspent. But after being pummeled by tourism, by financial markets, and by energy prices, everything seems to be lining up very nicely for the Caribbean as a whole. So Jamaica's already shown itself to finally come out of its policy malaise and get reform done. Even Barbados has put through 3 years of austerity, and it looks like they're finally starting to recover. Bahamas has a little problem with one little project that isn't operating right now, but still, Bahamas looks pretty good, despite the fact that Bahamar is not going ahead. Trinidad is the one that faces the challenges because of their dependency on oil, and even there, it looks like the new government is in the throes of adjustment. Of course, they're going to exaggerate how bad things are so they can get more stuff done and put blame on the prior administration. But we're pretty, CIBC has a big presence as well as other banks, Canadian banks. And we're pretty constructive on the region for the first time, really, in quite a while, since 2 years ago.
Thank you. Pablo, you want to just touch briefly on Central America?
There's probably a bridge with Central America, which is what's happening in Hispaniola, which is a bit of a bridge between the Spanish-speaking community and the onshore regions. And Hispaniola has still this dual shock issue of having the Dominican Republic on one side and Haiti on the other one, right? So DR is just doing great, actually, and all the elements that John highlighted, the U.S. employment outlook, tourism, remittances, and also the probably reaping the benefits of structural change in one specific sector, tourism, that is capturing, a lot of U.S. and Canadian flow, and in an environment of U.S. job gains. So I think, of course, the rates of economic activity that we've seen that have been so high will be moderated, but still, so from 6 to 4.5, 5, still is a great opportunity in that country. If you just also do this big jump, through the Caribbean and land into Panama City or San Jose, oil prices is good news for these economies. The Panama Canal expansion is, without any doubt, a major structural opportunity for the region. May improve transshipment activity, logistical services development, even increasing presence from external actors. Chinese corporations are also willing just to see how they can benefit from Panama. Panama itself is no longer a country or nation state; it's a hub. So I think there are some issues regarding regulatory compliance with new financial laws. I think they're going to be dealt with fairly quick. But again, good prospects there as well. And on the Costa Rica side, again, a country that they pride themselves on having, what Colombia was spending on arms, they were spending on education. So they have a lot of this critical human capital that it needs to be put to work. So there's a bit they need a bit of an injection of sense of urgency, because they have, the resources, but they're not probably employed up to its maximum potential. So again, but we're constructive, and we are in those three countries. We have a presence with a long-term development view, and this is investment from a Canadian company.
Thank you. Thank you to all the panel. Turn it over to Marta to close the program.
Thanks again to all our panelists. I would like to invite everybody to just give them a hand of applause. And I'd also just really like to thank our event partners again, Faskins for hosting us today, as well as CIBC. And also just make a mention of our annual sponsors, without whom we wouldn't be able to put on these sorts of events. Barrick Gold, Kinross, Continental Gold, Scotiabank, as well as our gold members like Caisse de Dépôt, SNC Lavalin, Gold Corp, KPMG, Ellis Don, Pacific Exploration and Production, and National Bank. Thank you all for staying. We know that we ran a little bit of overtime here, but thank you again for coming out this morning. And again, just thank our esteemed panelists for always giving us amazing information for the year to come. And always to Ken for moderating. Thank you again.